hard to be bearish because we were seeing these like nice rallies and off the BTC ETF and the things. But then it was like, on the fundamentals, the setup, we're going in still into this really sticky inflation environment, rate hikes. It's like it was very actually hard to be bullish on the setup.
Mm.
And I don't know what's easier, in all honesty. I think both of those situations are a bit different, and it's quite the contrast from where we were July, where I think it was like rate cuts are coming for the first time in September. You can't be bearish. Price action is really starting to move now. You can't be. They're just like great times, but they can't always be there. And I think that's where conviction comes in and risk management to the other side. So what we're going to talk about today, we are going to have a quick chat around, the state of the markets, very briefly. I think there's a few interesting things to talk about, where we could see good news, where we could see bad news. We're going to dig into the long-awaited and still yet to be confirmed Uniswap fee switch and why I think that's important. Even in kind of the current setup that we have right now. And then, Austin, I know you really wanted to dig into the kind of current state of strategy, as in MicroStrategy, which I think is really coming into the wider DAT trend overall, but something we can dig into. So why don't we just start? We've just got out of one of the longest government shutdowns on record, and it doesn't really feel euphoric. But on the other side, I saw an interesting take on this from a guest on Bloomberg, and it is really evading me who it was, so I can't quite remember. But one thing that I thought was interesting, they were saying is like, this whole discussion is going to come back up again in, I think, January, when they have to kind of relook at the budget and stuff. Looking at how long this went on for and how many things like really broke and how much of a real strain the average person felt, wasn't that bad. It's not that bad at all, really.
I think we all realize that we don't really need our government that much. I mean, fix TSA, either eliminate TSA or pay the TSA agents, fix the FAA, and fix the food stamps. And we're kind of like good to go.
This piece it's only been since, food stamps started to kind of like feel issues. And most importantly, I think we've talked about this before, nearly always the thing that breaks the government shutdown, like standoff, is when flights stop running.
Yeah.
That's when people kick off. It's what
do
happens
not get between me and Disney World, okay?
Exactly. Exactly. And the timing of this, people are like, wait a minute, am I not going to be able to go do my Thanksgiving dinner? Fuck this shit, right? So, but the point that was made around this was, well, when it comes to January and they have the same standoff, are they going to feel like they really need to get a deal over the line, or can they dig their heels in again and be like, look, I'm actually not that worried if the government shut down. There's not that much pain felt, and maybe it gives us a little bit more leverage here. And I think that the Democrats will certainly feel emboldened by that.
Oh, yeah.
For sure. So
I agree. Yeah. I mean, I definitely feel like a mixed bag on this one. Like, I do think that despite all of the effort to sort of label this the Democrat shutdown and to make the point that, you need like 60% of the votes in order to approve a budget and all of this stuff, I think that, like, from a sentiment perspective, this was worse for Republicans and more specifically for Trump than it was for Democrats. And what's interesting to me is that I'm seeing Trump be attacked not just from the left, but also from the right on this. And more broadly, you're seeing, like we have some governor races that are coming up where you're seeing candidates that were running against Trump on like a pretty right-wing platform that are being attacked by Democrats from the right. So
Yeah.
there are some really interesting things happening here. The example that I'm referring to specifically is Vivek in Ohio, who is running against a Democrat that is probably going to win, which is really like pretty
That is quite the turnaround, isn't
interesting
it?
for Ohio.
Yeah.
Yeah, I mean, it's look, a lot of Republicans want this Democrat to win because Vivek was so on the wrong side of the immigration conversation, and now this Democrat is attacking him from the right, talking about his bad stance on
It's
immigration.
what I
So
mean, it shows
you
the
have
shift in the Overton window that's
hmm
really happened. I mean, everywhere, but in the US in particular. And
hmm
I think in a two-party system, it's so much more fragile to those shifts because
yeah.
there's no anchor to the other side. You just it's so much easier to shift towards where the consensus is.
Yeah, it's I definitely think that the shutdown was not the best thing from an optics perspective for the Trump administration, and I think that that is a left wing and a right wing optics issue that is like mounting on top of this general sentiment that a bunch of promises that were made have not really been delivered upon, and an inability to like properly negotiate or maybe even strong arm the Democrats into a budget resolution and a healthcare resolution. Forget about the like immigration issues or the economy, unemployment, all of these things. No new wars. uh, yeah,
It's hard to
I'm.
keep a promise like this, right? And well, talking about promises, there and one thing that Trump is the master of deflection, and I think changing the
Yes.
narrative. And
Look at the
one
Epstein
thing
files. Like, oh, why do you all even care about that stuff anymore? That's not even the cool thing.
it
What?
I mean, for say what you like about him, he is unbelievable at changing the narrative. And one thing I actually want to call out that really comes back to the markets, and in particular
Yeah.
risk assets like crypto, is something that Trump shared on Truth Social. I don't know if you saw this, where he said that he would be sending out $2,000 stimulus checks to everyone in the US. I think
hmm
asterisks, except for some of the top earners, using
It
tariff
was over
revenue.
$100,000, right?
Yeah, right. So, and this, by the way, would equate to probably the largest stimulus check in US history as a starting point. It would be
hmm
way bigger than COVID, like everything. So,
Yeah.
um, which
And remember what
I don't
happened, by the
know.
way, when we did the COVID stimulus checks and just the insane distortion that happened in our economy following that? I mean, like incredible amounts of inflation. Everyone was going out and buying new cars. Like G-Wagons were impossible.
It
You couldn't
was.
even buy a G-Wagon, dude.
Oh man, yeah, I was gonna get my super yacht, and like so bummed out about it. Well, this is the point, though, right? So, I can't tell if this is just Trump posturing in light of the Supreme Court kind of ongoing battle with them around, are the tariffs legal? And, thinking like 10 steps ahead here, is Trump just putting this carrot there so that he could say, hey, these guys are taking money out of your pocket. We can't do this unless this guy. Yeah, I'm like, where's this go? Let's
hmm
just say this is a giant if. I would give this 5% chance, but anything is possible in Trump world. If this happened, this would be, I'm talking short to medium term, the single most bullish thing for risk assets you could possibly imagine. Like nothing else would matter. And my view would be there would be a true reckoning when it comes to inflation that would ramp up pretty quickly. But it would send crypto to new levels. Absolutely. I think
hmm
now let's put a pin in that because I think it's a very outlier chance. Do they do some kind of payout on tariff revenue? I'm like 50-50 on that. I think that
Hmm.
something, he's talking about it a lot. Even small
Well,
amounts of
wasn't there also a
stimulus would be
promise,
huge.
stimulus or tax cuts? I mean, there were huge promises being made about like tariffs could be the way toward eliminating income tax,
Yeah.
which would be a different angle to handle this, and maybe wouldn't buy you as many votes, but would
Mm.
probably be more long term, sustainable from an inflation perspective. But I do
Yeah.
think, to your point, Matt, like that definitely right now, fiscal stimulus is a bigger driver than monetary policy. I think that this 2K potential stipend kind of is overshadowing Fed action, even.
Yeah. Well, and here's the other thing, right? So let's assume that doesn't happen. Even if that doesn't happen, why did I say I think it's hard to be bearish about the setup, the the whole wider macro setup? More liquidity is piling into the market, and more is to come. December 1st,
Hmm.
the Fed officially end QT. And I've seen so many takes where people are like, and quantitative easing is kicking off, the money print is going. Balance sheet expansion is actually starting, but it's going to be in such a small, insignificant way at the start. But this is how all balance sheet expansion from the Fed begins, right? And it could become very meaningful. At worst, it is expanding and not contracting. There is more liquidity coming into the
Hmm.
market as the Fed acquires more treasuries. We're also seeing, alongside this, a lot of like really important signals around liquidity that that point towards markets seeing an injection of cash into them. So there's something that we don't need to go into too deep on this, but there's something called SOFR rates, SOFR. It's a secure overnight financing rate, and the for anyone that isn't familiar, which wouldn't hold it against you if you're not, is it's the measure of like the rate to borrow cash overnight, largely by like financial institutions, collateralized by T-bills, by treasury assets. So lower rates means more cash in the system, more ability for banks to borrow overnight, more to lend, etc. So that rate has been quite tight recently, and in the past roughly week has just nosedived down. And that's really giving a breather. All of these things are lagging indicators. That's the important thing, right? It's like you look at, Fed balance sheet expansion, rate cuts, SOFR rates like dropping, all of these things. It's not like if you put them in a line chart next to things like Bitcoin price or gold or whatever, and they map perfectly, they're a lag. And the biggest thing right now that I think is holding back the market, and let's just talk about crypto specifically, right now is the December rate cut decision. And this is what I think there's a lot of like back and forth on. What we're hearing is that due to the government shutdown, we are not going to have the October CPI or the non-farm payrolls jobs data ever, right? It's like you had to kind of do the survey at the time. It's gone. There's no data. It's kind of, I don't know if
Hmm.
it's unprecedented, but it's extremely rare. So we
Yeah.
don't have that data, which is kind of being portrayed as like, oh, that's going to be hard then for the Fed to continue on their path. I don't think it is, because all of the private data, the private sector data we've had is pointing like job growth aggressively slowing. We're not seeing
Mm.
anything material in inflation. That's the big wild card, is in November. Sorry, is in December. Do we get an inflation print that comes in hot? I don't think we do see that, because
Hmm.
all other measures are not pointing towards that. So, we're at about, I think it was about 53% today. It was in the 65% yesterday, of Fed funds futures for a 25 bips rate cut. So it's come down, and I think a lot of this is being driven by some of the regional Fed presidents, which aren't all voting governors, right? Like that are coming out and are like, I'm not in favor of a rate cut, but at least half of the governors we know today, the voting kind of Fed governors, are pro a rate cut. So I
Hmm.
think, we get December rate cut, and I think we get a really nice bit of momentum, but it's not going to be until, you know, quite a while towards near the end of the year. Um,
Yeah.
but yeah, I think
Well,
it's a
what's
good setup.
the so that we have a good setup. Uh, what's the pessimistic side of this? Like, is there anything that we should be watching out for?
Yeah. So clearly, when we look at the markets and we look at crypto in particular, look at BTC, um, you know, if I'm there's actually, you look at this and it looks negative, but if I just bring up the BTC chart, but I see more positive in the grand scheme of things. I'm not just being like rose tinted glasses here, but if we kind of look at the BTC chart, right? Oh, why have I got the 15 minute? The 4 hourly. Let's just bring this back. Um, so if we, in fact, I'll even move to the daily just to make this a bit easier. If we kind of take a look, we've really struggled. Like when we had obviously the October 10 crash here, um, and we kind of made a recovery. We got back up to kind of around the 117K level, and we saw that first rejection. We had another rally back up, rejection. We had multiple days of rejecting these levels. And since we kind of like saw us really break down through from 110K, and we've been hovering, as you said at the start, in and around this level of like the 100K ish zone. We made a charge back up to 107, and then we kind of rejected. Why I think this is good is that we haven't broke. You see this like yellow kind of block here, right? I think if we break below this 2K mark, there's so much support of bids in this area that if we break through it for a sustained period, we probably start to get down, and we could, I mean, you could say you could go as low as like 78. And I think that's when things start to
Hmm.
get into like, it's over. Maintaining and holding this and not breaking like market structure, it's actually quite positive. So I think that's one thing that's positive on that front. Now, what's the bear case? If we don't get a December rate cut, you know, uh, that will go down badly. And more
Hmm.
to the point, I think we talked about this before. Bad news is disproportionately impacting risk assets to the
Yeah.
downside, whereas good news is not having an equal upside impact. Look at the earnings reports recently. I think like I was looking at Robinhood's earnings. It had an unbelievable quarter. Like all of their numbers up and to the right, beat expectations, smash it. Next day, stocks down 10%. It's like,
Yeah.
what
Yeah.
is going on here? Right? Like,
Hmm.
and this is across the board. Um, China, US, we're all kind of just not talking about that right now, like it was solved. That could easily reignite somewhere along the
Hmm.
lines. And if we do get some bad news on CPI, which I personally think is less likely, that would also not be great. And in the background to all this, we kind of have this Supreme Court tariff decision, which is a bit of a curveball. And it's
Yeah.
uncertainty, which is what we have not liked so far.
Yeah. So, uh, it looks like we could run into a really interesting final quarter, final close out of this quarter of the end of the year here. I think that we, as you alluded to there, China U.S. trade tensions, Supreme Court tariff decisions, even Fed rate policies to a certain
Hmm.
extent. There is just some political volatility, that's happening here. And I do wonder, like, is there a mispricing? It feels like for example, rate cut expectations matter more than the actual cut itself, right? Like markets are
Yeah.
moving on forward guidance long before anything actually changes. And I wonder how much of this is, queued up to happen with signals that are given around this political tension and volatility as well. We'll have to see.
Yeah. I think people are just not there's there's a real there's a strong amount of support at low levels of like when we see pullbacks, the kind of people are bidding back up and they're not like even across major equities, we're not seeing capitulation. Capitulation is not
Hmm.
happening really anywhere right now. Look at gold as a good example of this. See pullbacks, uh, and but what we are lacking is people to have the conviction to break back through because the uncertainty. It's like, hey, am I
Hmm.
gonna like jump the gun here? Do I want to like start bidding up when we hit like 107K BTC? When we might just not have the conviction to power through that level. And maybe I wait and see. And I think it's just a lot of wait and see. And but
Hmm.
I do think that we will be primed to rip back up. But I
Yeah.
think there's like a lot of narratives. I think talking about narratives, we can jump on from the market stuff because one story that I think super important, super interesting, and very relevant in all of this, and where there's been actually some interesting price action as well, is around Uniswap. Now, if for anyone that's even remotely been paid attention to crypto, you'll know that Uniswap is one of is the cornerstone of DeFi. It is the I mean, the blue chip of blue chips when it comes to decentralized exchanges. One of the early ones, kicked off a lot of DeFi summer back in 2020, had an amazing airdrop. And I think ever since the beginning, there was this idea that Uniswap would be able to flick a switch and take some of the revenue that they generate in fees, which is a substantial amount, by the way, um, and use that to buy back their uni token in this idea of like, getting value accrual from the protocol success into the token. And this is for a long time been something that has really been a huge narrative across a lot of DeFi. The problem has been that historically, regulators have been all over this. And, up until the past 12 months, we've been in such a huge stranglehold from the previous kind of SEC administration and others. But now we've seen a huge softening of the stance, in particular on DeFi
Hmm.
protocols. Um, I think like we've seen more acceptance around smart contracts not being financial intermediaries, really important. We had a lot of the high profile cases like the Uniswap case, the consensus one around MetaMask. They've like shifted a bit more now, more nuanced interpretations on that front. And in many cases, in both of those cases, lawsuits being rescinded. And I think this has like opened the door for protocols to go back and revive ideas that once were just basically in the bucket of they're too risky from a regulatory perspective, in particular around using protocol revenue to basically distribute to token holders. I think like 12 months ago, this would have been unthinkable. And I think today, DeFi protocols feel like they've got just enough kind of regulatory breathing room to start acting like mature revenue generating operations now. And I think that's really interesting. And Austin, we've talked a lot through this year around token buybacks being a huge theme, hyperliquid being probably the biggest, right? And I think it's a very well established blueprint now for value accrual without having to pick a fight with securities regulators. So
Hmm.
we have Hyperliquid, Pump Fund, Layer Zero. They are some of the biggest when we look at this year in terms of token buybacks. Hype has done $644 million worth of their protocol revenue has gone on buybacks. 1.4 billion that Hyperliquid spent this year, 46% of it has gone to token buybacks. This has
Hmm.
significantly supported hype price, as we've talked about. Um, Layer Zero has done, I didn't realize this, 150 million worth of buybacks. Pump Fun, 132 million. And even like the likes of Radium did 100 million, Jupiter, 57 million, Sky, which was formerly Maker, 78 million. So there's a lot of this that's happening. But I think as early as I can remember, there's always been this hope that Uniswap will, turn this switch on, and it was one of the biggest pieces. To give some scale to this, Uniswap currently has an annualized revenue run rate from their fees, from their DEX fees, of around 1.25 billion. Sometimes it's more, sometimes it's slightly less. Historically, 100% of this goes to liquidity providers. So kind of the fee switch, it lets the DAO use a percentage of the trading fees to the treasury to actually like buy back Uniswap. I saw a good tweet from Bread, who's a great follow on X, that did a bit of a breakdown of like, based on the proposal, because it is a little bit nuanced. They haven't just said like, oh, it's a flat percentage rate that would go in. It involves some fees across different pools at different rates, their uni chain sequencer fees, et cetera, but the net is it estimates around 38 million per month in buybacks. So I was doing some very rough napkin math here. And over the space of a year, if that math were correct, and if we just took the current token price, about $8, this would equate to buying back around 9% of the current circulating supply. That would be bigger than the impact of any of these. So
Wow.
Hype has bought back around 2.1% of their circulating supply this year, which is a lot. So, now, of course, it wouldn't actually work out to 9% because you've probably got some additional tokens coming into the supply. Price would go up as this happens. But, just putting a stick in the ground here, it's a huge amount and would be definitely the largest in like volume of buybacks versus the secondary supply. So Uni price rallied on the news. There's still a proposal that's being voted on now. It was actually submitted by Hayden, the founder of Uniswap. They had tried to do this a few times actually between 2020 and 2023, but none of them passed because everyone was worried about the legal implications. So we'll see how that plays out. I think there's more that are happening here. I also saw that Lido, as in the creators of Staked ETH, is, as in the liquid staking token, is discussing somewhat of a similar-ish type thing, not quite protocol fee piece, but any excess treasury funds that they would generate in terms of profit would go into token buybacks. But it would be capped at like 10 million annually. Could potentially be less than that. But again, it's quite a shift in the approach. And I think certainly if this fee switch goes through on the Uniswap side, it'd be very bullish for Uniswap, but I think would also just really cement that this is the business model for DEXs moving forward.
Yes, I totally agree. I think that if this works, others are going to copy Uniswap, and you're going to see a wave of similar proposals. Ultimately, I view this as being a sign that DeFi is growing up. Protocols are starting to act like real businesses with revenue and expenses. And this buyback strategy, I think, is really interesting, because it puts some steady upward pressure on the tokens by reducing supply over time. And this idea of using excess treasury funds or fees to make that happen and, sort of reinvesting into your own protocol seems like it could make some sense. But ultimately, it feels like this is all being backed by this big regulatory shift, which I think is the bigger story, because this enables DeFi to do things today that frankly would have been shut down a year ago.
Oh my God, definitely. I don't like people would have been too scared to to put this up. I think one thing that you touched on as well around like operating like real businesses. The thing I quite like about this is it puts the onus on really valuing profit and revenue generating businesses
Hmm.
higher, right? And not
Yes.
just speculating on
Yes.
the token's notional value. So
I
yeah, I think
totally
this
agree.
is a really positive thing.
I think eventually people are going to value tokens based on actual cash flow and not so much on hype or narratives, which is ultimately a good thing.
Agreed. Completely agree. And I think it's been really hard to do that in the past because the question was always, well, how does the revenue flow back into the token? These are two separate things. They're not connected. And now forming this connection, I think we'll start to see more
Hmm.
novel ways of doing this, maybe even outside of just like buybacks in the future. But I think this is a great starting foundation, and hype has really given a lot of confidence to the market. I think that this is a sustainable, strong narrative that investors are very much in favor of.
Yeah. All right. So one final thing that I wanted to dig into here that I thought would be, really interesting is I want to talk about Michael Saylor and strategy, formerly known as MicroStrategy. They had to
It's been a
complicate
while.
that
It's
for
been a
us.
while that we've
Yeah.
talked about Sailor, actually.
It has been, and usually when we're talking about them, we're discussing some incredible buy or trade that they did, or an incredible amount of money that they made as a result of that. Feels like this is the first time in a little while where we've had some questionable news about MicroStrategy, aside from just are they crazy?
Yeah.
um, and that is because MicroStrategy is currently trading below its BTC value, below its Bitcoin value.
Mm.
So their market cap briefly fell below the value of their Bitcoin treasury, which essentially means that the market valued the entire operating company at negative enterprise value after backing out the BTC. So I think that the signal here is that investors are maybe starting to prefer direct Bitcoin exposure over corporate wrappers, which
Mm.
is like a little bit of a 180 from the last time that we talked about this, I want to
It's a
say.
180 from like 2 months ago.
Yeah.
Like
Yeah.
I think the narrative on DATs has gone full 180 right now.
Hmm. It has. So, why is this happening? Well, there's probably a few factors here. The first and the most obvious is that these corporate wrappers, while they do have some positive upsides that we've discussed in the past, like the sort of bet that you're making on the leadership and their management structure and strategy and everything like that. They also add a lot of friction, like debt, execution risk, governance and management risk. There are two sides to that coin, and also the regulatory exposure that they experience. But I think more importantly, today it's easier than ever to just buy Bitcoin directly. We've got spot ETFs, we've got regulated custody, and investors, frankly, no longer need something like a MicroStrategy to be a synthetic ETF when they can just buy in direct rather than buy the sort of corporate wrapper or MicroStrategy. I'm just going to buy it directly. And
And
so I think
also there's
that,
like choice of the corporate wrappers as well. Right?
yeah,
Like
you
there's
have
loads
more
of other
options.
DATs that
Yeah.
have popped up. So yeah, like, do you think it's been a good thing to have all of these DATs pop up? It's like on one side, it's like from Michael Saylor's perspective, there's like before strategy were the only ones.
Hmm.
Like people would question their business model, and like that was always the question. Like, hey, is this a giant Ponzi? Blah blah blah. And then we were kind of like, no, okay, this is a real thing, and it's actually worked well. All these other DATs came in. It's like some of them don't perform very well. And then it on one side you could say, well, it puts Sailor and strategy up on a pedestal as like the gold standard, makes them look even better. Then the other side, it's like, does just like the drag down of that narrative like hurt them? I don't know. I'm not
I
sure.
I think the jury is out on this one, but eh, you know, just looking back on this historically, yeah, the narrative around MicroStrategy was always that they were crazy and that they were maybe a little unhinged and untrustworthy. But during that entire time, they just absolutely fucking printed money.
Yeah.
And for the first time, I think that we're starting to see some cracks here. I mean, you remember all the times that we've talked about, like, oh, they're taking out another $700 million loan, or they're doing like a corporate debt restructuring to buy another $1 billion worth of Bitcoin. And somehow that always worked out. Oh,
Yeah.
their average Bitcoin purchase price was $30,000 and during their last round, and now we're at 60K. I remember talking about that. And
Hmm.
um, this sort of shift that they've taken to really, I think, to be strategy, like purely a Bitcoin wrapper, instead of MicroStrategy, a tech company with just an incredible amount of Bitcoin on the balance sheet, and to position themselves to the market in that way as a vehicle to invest in, as opposed to just being like this huge corporation that makes a ton of money off of owning Bitcoin, like,
Yeah.
and doesn't really care what anybody thinks. Um, I don't think that it's that we can determinately say whether or not that is a good thing, but I have to imagine that right now, you know, I mean, look, Michael Saylor has an incredible amount of conviction, so maybe he's not personally worried. But I imagine that there are people, involved in this shift that are kind of wondering, like, oh man, did we just commoditize ourselves a little bit here? But
Yeah.
I think there is a question of, on a macro level, is this a healthy development? And my thought there is, sort of putting MicroStrategy to the side. Yeah, this probably is a healthy development overall, because it indicates that in the crypto market, there is maturing capital allocation happening here. And these equity proxies are losing product market fit once cleaner instruments like, ETFs exist, and the market is rewarding these pure assets instead of sort of the financial engineering that you would be subject to with a synthetic ETF like MicroStrategy. But I
Mm.
think that there will also be some second order effects. You're probably going to see corporate treasury Bitcoin strategy become a little bit less attractive. CFOs are going to see maybe no market premium for holding Bitcoin on a balance sheet. I also think that capital is going to end up rotating from equities to protocols. I mean, we're already starting to see this. This is literally what we're talking about. Investors
Yeah.
want exposure to monetary networks, not as much to intermediaries that I think, even though it's a 180 from just a couple months ago, they see these intermediaries as potentially introducing some risk. I
Yeah.
also think that this puts pressure on other crypto exposed equities like miners, exchanges. They could see some compression.
Hmm.
And I think that what it does is it strengthens Bitcoin, ETH, and layer twos as these sort of primary investable assets. So the cleaner, harder assets themselves get this quality premium because they're simpler and they're more straightforward. And now you can own them directly and not, really worry about the regulatory risk or the governance risk that you would take on as a result of
And
that. That
there's so
said,
much liquidity as well on most of
yeah.
these ETFs. We've now got the Sol ETF, I think
Mhm.
XRP, like, and more and more and more are coming, right, as well.
Yes, it's just straightforward. That said, I don't think that this is bearish for Bitcoin, definitely,
Mm.
but also it might not be bearish for MicroStrategy either. I mean, keep in mind when Bitcoin goes up, like they benefit no matter what.
Yeah.
But I think that what's happening here is, yeah, the market is choosing hard assets over corporate wrappers. That's something that we're seeing. I think that crypto capital flows are just becoming more efficient, and that's a good thing. It's similar to how early internet investors shifted from these like internet service protocol stocks to the actual platforms themselves that were built on top of the protocol. So we're
Mm.
seeing a maturing happening here. But at the same time, despite the rebranding and the repositioning in the market, MicroStrategy's fundamentals really haven't changed. They're still buying Bitcoin aggressively, and they're pretty committed to that strategy. And so I think that this discount that you're seeing is reflecting maturity more than it's reflecting weakness. And the market is applying a pretty normal corporate risk discount instead of paying like a sailor premium like they
Yeah,
were
yeah,
previously.
yeah. And you have lots more. Yeah, I think like the Sailor premium now on the ETH, the Tom Lee premium, it's all
Mhm.
it's all reduced down. Uh, could this also be like a grayscale moment where we look back at this of like, strategy trading below MNAV as being like an amazing purchase?
Oh man.
The he,
You said it, and now it's going to happen because somehow your predictions.
as long as I don't actually trade it, so I can't benefit from it myself,
Yeah,
then
yeah,
yes.
yeah. Don't trade it, and then I mean, seriously, Matt, we should do like a retro at some point of like all of these. Like you were, what was it, grayscale that you called like
Yeah.
months before it happened?
Yeah,
Is
that was
like
when it
it
was the
was a super.
40% discount to NAV. Yeah, that was a good one. In my
Mhm.
defense, as a UK-based investor, I couldn't get exposure to it. So I had a reason. I did try actually on that front and couldn't. Pain in the ass. But hey ho, we live and learn. But yeah, I'm sure there'll be a great graveyard of my trades I didn't make that were good. I prefer to index more on the ones that go badly, to be honest, just to
Yeah,
even out karma in the rest of my life. And
yeah.
we live a better place that way. All right, well, let's wrap things up. I think that while price action's been quite choppy, I do think there's more things to be positive about than negative. I think we're going to see more and more when it comes to some of the stuff around Uniswap and the fee switch stuff. It's going to be super interesting to see how that plays out. Um, I don't feel like we're going to have a ton of action in November, but the one thing that is often a wild card is Thanksgiving. There's something about it.
Mhm.
What do they put in the turkey, Austin? That's what I want to know. What do they put in the turkey? It gets everyone excited. Maybe it could be good timing, but we'll see. I think December is going to be where we might start to see some more positivity come into the markets, but
Mhm.
we cross our fingers and hope. At least the
Yeah.
flights are running. That's the important thing.
Exactly.
All right, man. Well, it was a pleasure, and I'll see you next week.
Yeah. Talk to you then.